What's going on, guys, and welcome back to the channel. So let me ask you a question. Are you a struggling beginner trader? Because if you are, I've got the 5 biggest mistakes I used to make as a beginner trader, and I'm going to show you how to overcome them and how to stop making those mistakes. As soon as I stop these 5 mistakes, my trading results improve significantly.
The new era of American spaceflight.
So let's get into the video. So my name is Pep and I'm here to make you a more confident and better trader using simplified techniques and strategies. So the 5 things we're going to go through in this video is risk management. So we're going to touch on our stop loss, how to position our stop loss and how not to position it. We're also going to look at our take profit levels as well. And then we're going to move on to the news and how not to time the news and when to check the news. I'm then going to show you correlated pairs and when not to trade multiple Forex pairs. And lastly, we're going to look at not forcing trades and how to improve your consistency when trading Forex. So let's jump into it. Okay, so first off, let's start off with our stop loss. Now, a lot of the times people make the mistake of moving their stop loss too early, or they start widening their stop loss, or they start adding to losing positions, which is really bad for risk management. Now, as a beginner trader, you want to ensure you only risk 1% of your account per trade. Now, doing this is really going to help you, it's going to stop you from blowing your account. So let's take a look at our stop loss, for example. So let's say, hypothetically, we're going to enter a short position where price currently is. So let's get our risk to reward tool up. Now, our stop loss is going to go above most recent structure here. So an obvious place that if we were to take a short position here is our stop loss would go above this wick here. Because we know if price breaks this structure level here, then our analysis is going to be wrong.
Wrong. You're wrong.
And, we want to get out of the trade as quickly as possible. And this is a whole reason why you use a stop loss is, as soon as you know you're wrong, you need to exit this trade as quickly as possible. So let's start with adding to a losing position. So we've entered into this trade. Now, what people tend to do is as price moves to their stop loss like this, what they'll do is they'll start entering into additional short positions. So they'll enter another short position here to try and add to their position to, because what they'll do is they're thinking, right, this trade is definitely going to go in. So I want to get the maximum out of this position. But obviously doing that, one, you're risking more than 1% of your account per trade because you would have risked 1% here when you took the short position. So now, we could be 2% of our account or maybe 3% depending on if you're on tilt and how you're dealing with your emotions. And then what tends to happen is you might then enter another short position here. Again, adding to your position size, risking more of your account. And then eventually you'll get stopped out and, you've lost 6% of your account, which, is definitely not great. So trust me, don't add to your position size when you have a trade open. You can start to enter, let's say you get stopped out and there are additional short positions to be taken here, that's more than fine. You can start entering into a trade more than once if they're separate trades, but whatever you do, don't start adding to your position size when you're in a losing trade. Now, the next thing beginner traders make the mistake of is widening their stop loss. So let's take this scenario again. Price is heading towards our stop loss. If we hit our stop loss, we're going to lose 1% of our account. And what people tend to do is, as price heads slowly to their stop loss, what they'll do is they'll widen their stop loss. Now, the thing with this is, 1, you're going to risk more than 1% of your account. And 2, you're going to hamper your risk to reward ratio as well. So now you're risking more than you should be and you're not getting a better risk to reward ratio. So again, over time, if you keep doing this, you're not going to be consistently profitable if you have a strict trading plan to have your stop loss where it was, just above this structure high. You wouldn't want it all the way up here because, this is not part of my strategy and wouldn't recommend having wide stop loss like this, especially on the daily time frame as well. Now, next stop loss mistake is, people are too risk averse. They don't want to take any risk. So what tends to happen is price will start moving in your favor. So now you're in profit. You think you're going to have a winning trade. And what people tend to do is they'll move their stop loss to break even too early. Now again, this just doesn't make sense. If you do this, what tends to happen, so your stop loss is at break even, what most people, beginner traders, will experience is price will come up, hit their stop loss. Now you haven't lost money, which is good, but you also haven't made money. And what tends to happen is, price will just roll over and then hit their take profit after you've been stopped out, which is really frustrating. Now you need to remember your stop loss here, this is here for a reason, because if price reaches a stop loss level here, you're incorrect about this trade, which is perfectly fine. That's part and parcel of trading. But if you move your stop loss down here, well, this is still a valid trade. So why move your stop loss too early? You're just going to hamper your profits here, and you're just never going to be a profitable trader doing this. Moving your stop loss here, this trade is still valid. It's not broken these past structure highs here. So it just makes no sense to have your stop loss here. So again, just keep your stop loss where it is. Don't move it. You have your stop loss above structure highs for a reason, because if price moves above this structure high, you're going to be incorrect about this trade. Okay, so now let's look at taking profits too early. So this is very similar to the stop loss scenario. Again, let's just say your strategy, you need to have a 1-to-2 risk to reward ratio for your strategy to work. So for every pound or dollar you risk, you're looking to make £2. So with this setup specifically, we know that we need price to head over to this take profit level here for your, to stick with your trading plan. Now, what a lot of beginner traders do is they'll start going into profits. The price will start going in their direction, and you'll get to around this mark, 70, 80% of your position size. And what tends to happen is, people's, fear starts setting in. And with trading, you always need to stick with your plan. You have your take profit here for a reason. It's part of your trading plan. It's part of your strategy. So what you don't want to do is to just move your take profit level, further up in this scenario. And then again, you're doing this so you can lock in some profits. Now, doing this, again, this is going to hamper your risk to reward ratio. So now we're getting a 1-to-5 RR, so we're risking £1 to make 1.5, for example. And again, over time, you're not going to be consistent if you make the mistakes like this. You have a risk to reward ratio that you need to hit for your strategy. You have your take profit level here based on market structure, for example. And you just need to keep this as it is. Keep your stop loss where it is. Keep your take profit where it is. Because what tends to happen is, price can get choppy, but this is part and parcel of trading. You just need to be patient, sit on your hands, and either wait to get stopped out or wait to hit your take profit level. Okay, so next we're going to take a look at checking the news. Now, this is really important. I recommend you check all the week's news events on a Sunday, and then every morning before you begin trading for the day, have another run through of the news events, because you don't want to get caught out by a big news event and then we get volatility when you're looking to place a trade. So what tends to happen is you're day trading, so you're on the 15-minute chart, you've seen a position you want to take and you haven't checked the news. So let's say, you hit the buy button and there's a news event within 5 minutes. Well, what tends to happen is during big news event or important news events, there's a lot of volatility. And what happens is you have that volatility, it wipes you out the trade, it hits your stop loss, and then it continues to go in your favor. Now again, this is another frustrating part of trading. Now, with news events and big news events, again, you need to backtest this, build this into your strategy. And what I recommend is not to place a trade just before a large news event, especially on the lower time frames, so the 1 hour and below. Because trust me, more often than not, the markets get volatile and you end up stopped out. and price will still move in the direction you predicted. So it's really important to check the news before you place a trade. Okay, so next we're going to take a look at correlated pairs. Okay, so let's say hypothetically you've seen a long position you want to take on the euro dollar and a short position you want to take on the euro pound. Now, before you open two trades at the same time, which is perfectly fine, you know, there's no problem opening multiple trades at the first time, but what you want to check is that the two pairs you're looking to trade are moving in opposite direction if you're looking to take opposing trades. Now, this is all to do with correlated pairs. So I'm going to show you the website I use for this. So this is a really cool website. So, you know, feel free to, actually, I'll add this in the description for the video. Now, obviously, this is a free website. I'm not affiliated with this in any way. So here we have the correlated table. So in the scenario I've just mentioned, you know, we're going to look at the euro dollar and the euro pound. So let's say we're looking at taking opposing trades on the daily time frame. So I'm looking to take a long position on euro dollar and a short position for euro pound. So you go to this table here, you find euro dollar here, you move along and you click on the euro pound here. So you click once and that's going to update these tables here. So as you can see here, this has a 65% positive correlated between these two pairs. So, you know, more than likely, I mean, best practice is above 70 or 80, the pairs are going to move in the same direction. But in this case, a 65% correlation, you know, and it's the same base quote currency pair, I'd probably avoid taking opposing trade. So let's say you're looking to take opposing trades on the 4-hour time frame. Now here we have a negative correlation of 56% or minus 56%. So you could make a case because there's a negative correlation, you know, you then can start to take opposing trade. Now a cool thing you can do in TradingView is you have the compare button up here. So let's just stick with the daily time frame at the moment. So what I'm going to do is compare euro pound against euro dollar on the daily time frame. So you click on compare, you search for the pair, and look here, look how closely this is correlated. So for example, you know, we have this move up. Again, we have the move up here. We have this move down here. Again, we have this correction here. So, you know, this is moving in sync. It makes no sense to take opposing trades on the daily time frame. I mean, look at here, we have, you know, this bearish move here. And then look here, we have a bearish move here, bullish move here, and then a bullish move here as well. So these are very closely correlated. So like I said, what beginner traders tend to do is they'll just blindly take opposing trades without checking the correlation. So that's one thing you just need to keep in mind when opening multiple trades trading Forex. Okay, and lastly, the biggest mistake beginners make is forcing trades and not being consistent. So what tends to happen is, you know, person A will just wake up one day and decide, right, I want to trade at 10 a.m. today, day trade in the 15-minute time frame. And I want to place 2 trades minimum. Well, that makes no sense because you're forcing yourself to go look for 2 trades, where what you should be doing is having a trading plan, having a strategy, and in that trading plan and strategy will dictate when and when you can't trade. If your strategy, if you're looking at the charts and there are no setups for today, then there's no point hunting trades just for the sake of placing trades. Trust me, you're not going to be a consistent trader doing that. And you can't say to yourself, right, I want to day trade at 10 a.m. today, and then the next day I'm going to day trade at 3 a.m. in the morning or at 3 p.m. in the afternoon. You know, you're just not going to get consistent results like that unless that is built into your trading plan. So trust me guys, don't force your trades. Let the trades play out. Let them come to your support and resistance zones or your areas of value that you've identified on the chart. And your entries, your stop loss, your take profit should all be based on a strategy that you've put together, which should have a positive expectancy. Saying to yourself, right, I want to make 1% today, or I want to place 3 trades today. That's what rookies do. And trust me, you know, you don't want to go down that road. So I hope this video has been useful. They were the 5 biggest mistakes I used to make as a beginner. If you avoid making these mistakes, trust me, you're going to be a much profitable trader. Ironing out these mistakes at the beginning is going to help you out so much. And if you have any questions, please let me know in the comment section. I'll happily answer them and I'll give you my honest and best opinion. So thanks for watching the video. As always, hit the subscribe button. That's going to help the channel out so much. And I'll see you in the next video. Cheers, guys.